Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the weekly wrap. Today, we're going to go over a few things that happened this week and the big talking points that are hitting the media for this weekend. I think it's going to be an interesting weekend. Definitely a fascinating news cycle. I mean, if you're going to be carrying any kind of positions into this weekend break, boy, I would say make them small and do it with caution. What I always like to say is if you are a swing trader, you have a big question to ask yourself every single Friday. Number one, is this position worth holding? And number two, should I be holding this position given the recent news cycle? So I want to just be ready for a lot this weekend. I'm going to give you three stories that really have my attention that I think that we're going to get a real big move out of the markets here probably in the next 10 days. And I think it could be as early as Monday's open. So I want to welcome everybody back to the room. Remember, if you're trading and you're interested in getting a broker involved, take a look at switchmarkets.com. They can go over there, get you up and running with a free demo account. You can run MT4 and MT5. We've also got something really big on the horizon that's going to incorporate TradingView into the offered platform. So I'm really excited about that. Just stay tuned on that. That's going to be a few months. Let's keep that under our hat. But that could happen within, realistically, weeks to within a month. But I'm not day-to-day in on those negotiations, but I hope it happens soon because I really like TradingView's functionality. That's how we do all of our analytics on these live streams. I always say you can use any platform you want to enter your orders. I do that. I use a separate order entry platform with my TradingView to analyze the markets. But for convenience, there's all sorts of different options we have now, and it looks like the industry is getting that much tighter, so we're excited. And I think Switch is going to bring more value to the user in 2025 than it has in a long, long time. So definitely stay tuned there. Lita, always good to see you, Lita. So if you're interested in trading, remember today is a fascinating day. It's Friday. And everybody loves Fridays. I'm going casual Friday. I'm just going with a T-shirt and, no suit today. There's no reason for it. Let me see. Dave, good to see you, Dave F19. Yeah, there's really a lot going on Fridays, but not much going on Fridays. Today has been a really difficult session to watch and to trade. I've been sitting here patiently for about the past 4 hours, and I just haven't seen anything that I want. Really at all. I've seen a lot of chop, a lot of whipsaw trading, and this is one of those where if you're serious about being a trader over the long term, over 5 years, 10 years, 15 years, then you have to really start to think about the days that can hurt you and the days that can help you. And I will promise you, if you're new to these markets, you can make more money on a day that you should be trading than a day you shouldn't be trading. Now, is there a way to turn a profit today? Yes. And if you've made money, fantastic, and congratulations, more power to you. But if you haven't made any money yet and you've got a few trades still on the board, stick with your discipline. Don't force anything. Remember, we should have already made our money. Monday through Thursday, specifically Tuesday, Wednesday, Thursday, we should have already made our money. Today should be a fun day for us where we've already got some risk-free trades loaded up and we're ready to go into the weekend with a positive attitude and some good momentum. So remember, no donation Friday. I say put at least 50% of your profits in your pocket. That's absolutely imperative if you're having a winning week. If you're having a losing week, if it's a small losing week, I say trade as usual. You're probably doing okay. You might have just got caught up in a bad situation. If it's a big losing week and you're getting whipped on every trade, there's no shame in walking away from this. If you're having a big losing week, just wait till Monday. Come back, be ready, be fired up, be optimistic, and we can get right back on the horse and get things going here for a full trading week. And we're starting to see WTI crude move towards one of my levels. I'm going to get on that in a second. If you're in a neutral week, just trade as usual or reduce your leverage or don't trade at all. You have my blessing. Either of those are your options, and I think that's a pretty good way to approach Fridays. That's from my own playbook. All right, I want to go ahead and start off with Tesla. Now, we put this trade idea out a while ago, and by a while ago, I mean a few weeks. What does it say, 27 days or something, about a month ago. But we've been watching Tesla very closely with the 920. I'm really starting to like the 920 EMA crossover as being a potential swing trading or intermediate term investment tool for stocks. So if you're interested in trading stocks, maybe you trade on a retail platform like Robinhood or maybe E-Trade or something like that. You may be looking for a strategy to apply to stocks. I would be looking at daily time frames, 920 EMA crossover. This is an interesting type of a trade. Now, this Tesla came across the board about a few days ago, and there's our 920. This is our coded version. Remember, the gold bars mean the 9 crossed over the 20, and we're looking to go ahead and go long there. And right there would have been your long, right around 285. Pretty darn good zone, really. 285. You could have waited for a pullback to the moving averages, and that's a video we're probably going to be making here in the near future and got a little bit better price on it, but that's okay. Let's say you got long right there at 285. Let's say you bought right during the after hours on that or on the next day's close. You could have got it right in there. Today, we really flirted with establishing trade up over 300. We were up to about 307 on today's high. Now we're right around 297. So my guess is we're going to close right around $300. That's what a $16 gain, a $15 gain, let's say. And if you're looking at about 15 on 285 is what? I mean, I still have my handy dandy old Casio calculator here, divided by 285. What is that? That's a 5% return. That's not bad. So the real question is, Shane, okay, fine, where's it going? I think that it's a pretty darn good trade if we're just conservative with what we're looking for. I'd be looking for like a 325. That's not bad. It's a big round number. It's a quarter handle. I love quarter handles. Any of you that have watched for any period of time know I love quarter handles. I love 3 1/4. I think that's a pretty darn good level. You can see right now we're getting some resistance setting up right at 300. In my view, once we get established there, we're going to trickle higher to 325. I think that that's a pretty good place. So what is the payoff at 325? That's going to be about $40 a share. So what you're going to do is you're going to go 40 divided by 285 was our entry, and that's about 14%. That's not bad, 14%. And maybe you're just only in that trade for 2 or 3 weeks. That's a pretty good little swing trade for a stock. That's not bad at all when you're talking about a 15% return. Now, most of us are retail traders, and we say, Shane, we don't really have enough money to get invested in that and to make that really work for us. 15%, let's say you're only investing, I don't know, $2,000 or $3,000. It just doesn't pan out to being that much money. I understand. That's where things like options come into play. And I can tell you that options, I've been doing a lot of work on options lately. And I genuinely, the jury's still out for me. I love commodity options. There's different ways you can do it in the futures markets. But as far as timing up a stock move, I think unless you're in Congress or you're in the U.S. government, I'm not sure you're going to know when these things move. And I've seen a lot of that. So we may be doing some work on options here in the near futures. I got a lot of requests for options. A lot of people trade options and really love it. I don't know. We'll see how it goes. T. Marina, good to see you, T. But as far as our trade follow-up, that's a pretty darn good trade. We're in the green. We had a pullback there, and now we've broken. Now, there's another trade that we talked a lot about, and we talked a lot about this yesterday. I talked about Bitcoin. And we really started to outline a couple of key areas. And for me, it's all about big round numbers. Big round numbers, right up there, right around 100,000. It doesn't get any bigger. It doesn't get any rounder. Well, I'll tell you what, we broke through that in a big way yesterday. And now we've got to start thinking about the next port of call. These two areas, if you're I guess you could call those liquidity sweeps or whatever you want to call them. If you're a smart money concept trader, you call it a value area. You could also call this a supply zone, meaning there just weren't any bidders up here at this double top. If we in fact go sort of walk this back to say a monthly chart for Bitcoin, you can see exactly what we've got. We've sort of got a double top set up there. Right there, you've got last December's high and then January's high. So that high right there was at 108.364, and that high right there is at 109.35. So that area right around 110 is a pretty good monthly double top. So in my books, as soon as that level's gone, if in fact we go up and challenge it, and it really looks like we're going to be challenging it, as soon as we break 110, I believe we go to 125, and I think it happens fast. And for me, 125, I sort of was cautioning traders to say, hey, listen, how do you buy 96s? I was getting a lot of messages. Shane, what do you think about 95 Bitcoin? What do you think about buying? And I go, of course I want to be long. I'm not silly. I mean, you want to be long Bitcoin, but can you legitimately buy it from 100,000? There's a lot of people buying it from 100,000, and their idea is just like what we have on the chart for you here. Even if we print 125, that's a 25% return. And when you start thinking in terms of percentage on these investments that you really aren't getting forced out because of your time, like in a derivatives, like the other things we're going to look at here, where the price has to move right now. When you're in an investment, things like 25%. I mean, now we're thinking like hedge fund people. We're thinking like, okay, well, we're going to put $1 billion into this and 25% return, relatively low risk. And it is a relatively low risk trade because we're in such a big bullish uptrend, number one. But number two, you're sort of going to see crypto deregulation across the board. It's been pledged by the Trump administration. The government itself was talking about pouring money into crypto. Just those statements and those expectations support the bullish side of the crypto markets. I don't see a crypto meltdown coming. I just don't. I wanted my Shiba Inu buy. I wanted the Shiba Inu buy to really set up for me, and it didn't. I mean, you can see right here, we sort of had this wedge drawn for you. Nice wedge. But my value area was right down in here. Boy, I was just really hoping I would get a shot at 7.5 or 8. And you know what I say about hoping? Hoping's for losers and children. So right now, I'm optimistic that we may get a chance at this maybe later this summer. But right now, I mean, look at this break. Since that April 1st sort of meltdown, we thought we were going to get it. Thought we were going to get some action down there. And where are you at now? I mean, geez, you're up 6%. You're up another 12% this month. I mean, you're up significantly on a trade that I thought was going to come our way, and it just didn't. Welcome to trading, guys. Welcome to trading. They pay us to wait. They don't pay us to trade. Please do futures. Yeah, we're going to talk some futures right now. We have a teachable moment in this orb strategy. The orb strategy is by far one of the most popular things that we've ever put out. I love the orb. I look at the orb every single day. It seems like most traders, they want to trade the 15-minute orb because it's small and it gives you really a good look at that first 30 minutes of price action in the United States. If you're going to trade the orb using equities index futures, I got to tell you, if you're going to trade the orb even using your CFDs, I know a lot of you are abroad, international traders. If you're trading the US 30, the US 500, and the US 100, you really need to build your orb strategy right around that Wall Street open. So let's say you're in the UK. You got to be thinking about what happens at 9:30 a.m. Eastern time on the East Coast in the United States in New York City. So at 9:30, you guys are 7 hours ahead of me here in Montana. And I'm 2 hours behind. So that would mean you're 5 hours ahead. So that would be in the afternoon. So 9:30, plus 5 would be 12:30. Be about 2:30 p.m. Your time, UK time. I have to tell you, when I was in London, I was shocked. I mean, we were down in the cafe, and I watched people show up in the afternoon with their computers getting ready to trade. And I was like, man, my trading day is already over. 2:30 in the afternoon, I'm already in the gym. But this is something that we really need to focus on. You can't just do an opening range breakout on any time frame. You just can't do it. If you're going to do that, then you're going to be trading just a 2-bar breakout. And if you're going to do that, you probably should just do a 3-bar play. And those are videos that we've had out on all sorts of different channels. But this opening range, 15-minute right there, there's your opening bell, ding, ding on Wall Street. There it is. There's the retracement. That's going to be your 2-bar range. Now, the problem you really have with this trade, and this is something that really happens, this is a whipsaw day on the market. This is a whipsaw day on the market. There's no two ways about it. So when we're looking at the trade, we're saying, okay, I'm waiting for this break. There's your break. Look at the size of your bar. Look at the size of your bar. That's big. That would be your entry. So you went down, you got a few points. So we'd say, okay, Shane, what do you think about my stop loss and my profit target? I'd say, okay, first let's look at your stop loss. On a bar that big, I would do that. I would be right above that bar. That would be my stop loss. If I was even going to play it. Now, that's the proper place on a 15-minute orb to be putting your stop loss. It would be right above your A period or your opening period high, your opening 15-minute high, right there. That would be, and you always pad these a few pips. This is E-mini S&P 500. Boom, boom. Okay, where's the profit target? Now, here's where things get sticky. They really do. What do you have right there? 6:30 p.m. futures trade. This would be today's trade. Okay, back on the 8th, which would be yesterday. Remember, the market's closed down right around 4 o'clock to balance the books my time. So somewhere, right around 4:45 Eastern. Remember the timing. So your new day really opened right here on the electronic market. That would have been your overnight low. So the question is this worth it? If I'm looking for a key level to sort of base my profit target on, can I enter the market right here and can I look to right here if I'm risking all that? And the answer should be a resounding no. You can't do that. Sooner or later, you're going to see one of these. It's going to close and it's going to reverse. Now, you would have got away with it today, and you would have made some money today. I don't have a problem with making money. I like making money. All of you should like making money. But this right here, that's a flawed trade. And the reason why it's a flawed trade is you're not getting enough expectation out of this trade. Your expectancy, pardon my language, it sucks. It's not good enough. It just isn't good enough. Where does that leave us? Well, it leaves us going, okay, Shane, well, maybe I want to play for this. Maybe I want to put it way down here. I'd say, okay, maybe right there. Maybe we could shoot for yesterday's lows, Thursday's lows, something like that. Potentially. So if that was going to be your profit target, is it still worth it? You're still at less than a 1-to-1. 1-to-1 should be the basis. Now, if you could put your stop loss here, and shoot for it that way, you're probably in the ballpark. You're probably in the ballpark. Days like today give orb traders ulcers because they don't really break. The market hasn't really broken. I mean, I know we're off a little bit, and I know the chart's showing some downward price action, but it just isn't good enough. Were you right? Yeah, you would have loved to have got a bar close right up there, and then we could have shot for some money. So don't just play your orb every day to play it. I see that all over YouTube. There's always some guy sitting there, and he's always got a big dopey face, and he's pointing at his charts, and he's going, hey, I'm up 50,000 every day. No, you're not. Your orb. Understand your orb. So if I was an orb trader, purely an orb trader, and I've placed orb trades before, it's a great way to trade. What would I be thinking here? Okay, I like the E-mini S&P 500. Well, I've also got other futures contracts I can work with. I've also got my NASDAQ. Now, they all roughly have a correlation. They do. So right here, that's going to be your open, bang, bang. That's going to be your opening a 15-minute orb. And I'm just going to work with 15 minutes today. I'm not going to look at the 30s. Something like this. You still have the same problem. You still have the same problem. Okay, does it get any better on the Dow? Do I have a better looking market structure on the Dow? Okay, where are we at? Right there, opening bell, ding, ding. It's a little bit better. It's not much better. There's my orb. Okay, this is interesting. This is something that happened that didn't happen in the other markets. There's my entry. The bar didn't get as extended, you'll notice. Where's my stop loss? Could be two places. Personally, I think that you're going to want to stick with that above the range, especially if you're using real short time frames. Where's my profit targets at? Okay, right here. This would have been your overnight low. This would have been yesterday's low. Is this a better trade than the S&P 500? Probably. I don't really think you could have shot for that and got away with it. Something like this maybe, but you'd have had to do something like this. Now that instance right there, you're over 1-to-1. You have an opportunity to trade. So be selective with your orbs. Do I believe today was an orb day? No. No, I don't. Didn't believe it. Didn't believe it for a minute. Was really hoping you guys stayed out of that, but sometimes you get caught up in these trades and you really want to trade and you want to trade badly, and you get into a situation where, okay, I'm going. Like I've been watching WTI crude all day long, and I've got to sell. I mean, I want to sell 61.23 is bad. I have a range number up there, but right now the market's stagnant. It's ugly. We wanted to sell gold. Wanted to sell gold futures at 30, 33, 57-ish, 56. Thought we were going to get it. Didn't quite get it. Sometimes, if it doesn't look good, you pass on it and you come back on a different day. Let me see. T Marina, wow. Thanks, so not. Yeah, absolutely. So, I mean, that's what we're looking at as far as futures go. We got a couple other things that we need to talk about, and we're going to have an interesting type of we're going to have a big week next week. So let's go ahead and take a look at the fundamentals. First thing I want to do on the weekly wrap is this was a big week for your it was a big week, an absolute big week for central banking policy. The Fed talked, the BOE talked. They did different things. The Fed held pat, the BOE cut. So right now, this is the chart that everybody's looking at. We pretty much are assigning a 97% chance that J. Powell is going to leave rates exactly where they're at through June. And the reason why is the Fed's in no hurry to do anything. They don't believe they can act on the data now because of the tariffs. That's what they believe. So we're going to go ahead and see what exactly is going to happen. But it's not going to be in June. It's going to be in July. So we're looking at July interest rate expectations. This is going to be the first real iteration of when the Fed has to cut rates. That narrative, that first instance of that narrative going into the July meeting, it's going to be all about they have to cut rates, they have to cut rates, they have to cut rates. And they're either going to do it or they're not. And right now you got about a 60-40 chance, and this can change. This is incredibly hawkish. I want everybody to understand that this is very, very hawkish, and this brings a lot of things into play for the U.S. dollar. So when we look at these expectations and we look at how to trade something like that on the majors, well, I mean, it's definitely hawkish, no question about it. In the last 3 weeks, you've started to see the U.S. dollar rebound just a little bit, and you can definitely see that you're coming off in a big way, but it's only like 0.38%. So I mean, if you go right from these highs up here, right around 115.73. to somewhere right around 112.57, you're going to only be looking at a 125 pip move in 3 weeks. Or excuse me, it's a little bit bigger now, 300, something like that, but it's still 3 weeks. So we're talking about 15 trading sessions and 300 pips, something like that. That's nothing. 300 pips in 15 sessions, you're going to be looking at what? 300 divided by 15. I can't do it off the top of my head. It's Friday. Maybe on a Monday I could. 20. That's only what? That's not much of a net move per session. What I'm saying is it's very, very tight trading. It's nothing like this run up right here. So when I'm looking at something like this 112.52, we got a pretty good scalping out of that area. Real tight scalps, but they were definitely there. What you're looking at, 62% would be my next port of call, and that's what I would really be looking to develop here going into the latter portion of May potentially, and then also June. I think that could be a really great trade. Be a great trade for next week. I mean, right there, 62%. We're going to look to maybe this 13-period moving average is going to come up and kiss that 62% retracement, the back end of our golden zone. And then we've got just some fantastic stuff right there. I love that bid. I love it a lot. I think this 38%, this 112.50 may hold. It really may hold because in general, we've seen an incredibly hawkish tone, really a hawkish tone out of the United States Federal Reserve. They are not in any hurry to lower interest rates. And that's a big deal because that's sort of been that's really what we're sort of basing the last 3 weeks of price action on, is just sort of Jay Powell fighting with Trump and Trump fighting with Powell. That really is all that is. But we got to go big picture. Have we seen anything that's going to really strengthen the U.S. dollar just yet? The answer is no, we haven't. This would be an area, DXY, this 100, this 150 zone. This is a key zone. If we don't see price really break, we don't see the dollar index, and that means it's going to have gains across the majors to get there. You're not going to get anything really big, really confirmation that this trend is over until we trade up above 102. We've got to get established and trade up there right around 102, and if you don't get that, then you're not going to have really any reason to question the current downtrend. So the downtrend's not over. The U.S. dollar's taking a little bit of a break. We're printing right over 100. That's big. That's a key level. That shows that, there is a little bit of pressure taken off of the USD bulls. But for the moment, nobody knows. Why doesn't anybody know? Well, nobody knows because of the tariff situation, the trade deals, and that's going to be a biggie. Let me see. We're not in Team Marina. We're not in a good place. We're not in a good place right now. Jay Powell to June. Absolutely. No, 100%. You're going to see that out of Jay. He's going to say, okay, the economy's slowed dramatically and yada, yada, yada. And oh, by the way, I'm not going to seek to keep my post in 2026. I believe that's all going to happen by September. I really do. I think he's going to throw his hands in the air. Can't do it now. It's too early to do it now. It's going to give Trump too many talking points in the White House. But believe me, Jay Powell's already negotiating. He's already trying to figure out where he's going to land next, whether it's J.P. Morgan or Goldman Sachs. It won't be Morgan, but it might be Goldman Sachs, probably a private hedge fund or a private equity group. A lot of those bankers love to run to the private equity groups because they get paid a lot, and they get to get out of it. They get to get off TV and out of the spotlight. Paulson was a high-up central banker treasury guy back in the meltdown of 2008. He ran. Take a look at what Bernanke did after being a Fed chief. They all go to private equity, almost every one of them. A lot of them go to foreign equity. I think Paulson went to China, Chinese interests. Okay, I've ranted on long enough about that. Speaking of China, this weekend, this is it. This is these 3 things I'm going to show you really are going to set the table for what I would call make or break time already in trade war 2025. First, Chinese freight ship goods hit with Trump's 145% plus tariffs arriving at U.S. ports. You can see right here, 1,200 shipping containers. Okay, so we've got all this stuff that just landed in L.A. It's one of these things that these goods, everything in these tanks or these crates is going to go with an extra 145% tacked on. It's unfeasible. It's untenable. You're not going to be able to do business like that. China might eat those tariffs on the first round of deliveries. But Trump today already was online saying, hey, maybe 80% of that would be a pretty good area. So my guess is this weekend right here, You've got Chinese negotiators. You've got the U.S. negotiation teams with Besant. I believe Besant's going to be there, and Ludnick. They're going to be in Switzerland. Everybody's meeting in Switzerland, and they're going to have the high dollar dinners and all that stuff, and they're going to negotiate. My guess is Trump's going to give them something for making the trip. You're going to have an interesting type of a negotiation. They're going to back off on the tariffs. I would almost bet on it. It's sort of, they're going to have to get a concession in return, though. So my guess is, come Monday morning, you're going to see everybody sort of saying, hey, we won. China's going to feel pretty good because the 145% came down to 80, which is still going to be way too high for them to do business. But all those goods and things that are in the U.S. ports, hitting U.S. ports right now, they have a better chance of being liquid with 80% as opposed to 145. That's the first thing I'll say. So I expect China to feel decent about that and be able to say, see, America's willing to do business there. The U.S. is going to feel good about it because they're going to get some sort of capitulation, or excuse me, they're going to get some sort of concession. Wrong word. Some sort of concession. Now, it may be as simple as, hey, quit dumping our T-bills on the market. It could be something like that. It could be a reduction in certain restrictions on the U.S. It could be firing up rare earth mineral deals. It could be something to do with chip makers. I don't know what. But my guess is both sides are going to come in Monday, and they're going to sort of say, yeah, we got them. We won some concessions, and we can do business. Now, if it doesn't go that way, if it goes poorly and they have a big fight, and somebody says something the other doesn't like, and the other one, or maybe they have orders just to come in and be tough. We saw that with the Ukraine meeting with Trump in the White House. We saw that. Maybe somebody's supposed to go in and blow this negotiation up, figuratively, not physically. Then anything happens Monday. Then a market crash happens Monday. A lot can happen here. This is a supercharged news cycle. And the last thing I'm going to say about it is this right here. We're going to talk oil and gold in a minute, and then we're going to sign off. But this right here, Trump's going to Saudi Arabia as his first big move, his first big foreign trip. He's heading to the Middle East. So that's going to happen on the 13th of May, which is going to be next week. That's big. That means that not only is oil going to be in play in a big way, but so is gold. That's a big one. CPI Tuesday. What more do you want? What more do you want? So I'm definitely watching this. Geopolitical situations are going to make the markets, I won't say miserable, but they're going to make them challenging on a minute-to-minute basis, just judging by breaking news. That's what I would say. So let's take a look at gold and crude oil and then just go ahead and put a pin in it till next week. Let me see. Word on the street is that the White House has already started stockpiling and hoarding goods. Who knows? Who absolutely knows? I don't know. I think that if they learned anything from COVID-19, when the ports get jammed up, probably the first thing you stockpile is like toilet paper, toothpaste, things like that. Bottled water was a big one. People were having problems finding bottled water. So, yeah, maybe they've already got those big warehouses full of that stuff. I really don't know. I don't think the shortages are going to be nearly as bad as COVID, though. And I've seen talking heads all over the news saying, oh, it's going to be worse than COVID. I go, no, it's not. They're not going to let it get that far. I don't believe that for a minute. Okay, there's a good look at gold. Here's sort of our weekly chart. You can see we sort of came down, tested out that golden zone, and then rallied, and it's been an interesting dynamic. 3,500 is setting up to be an intermediate term top. Until we break above 35, I think you're going to be in a situation where potentially you're going to see sellers dug in at 35. I heard predictions today for $6,000 gold. No. Something big's going to have to happen. This is big right here. Everybody dug in at 3,500 and sold it. I'm still a net seller from right up in here, right in front of 35 until I see that thing break. I want to be selling. So right now, am I bullish or bearish? I'm really starting to settle into a neutral mindset when it comes to gold. Long term, you kind of have to be bullish, but until you see 35 go, I don't know that we go to 4,000. And that sounds like a real simple thing to say, but it's the truth. I mean, it really is the truth. So something like this, spike low there, spike high on the daily chart. Let's go ahead and just draw Fibonacci and see what we have. Got 62%, which is down there at 32.91, and that one lines up perfectly with our weekly, which is right there, right at 32.91. Weekly 38%, 32.92.50, 62%, 32.91. That 33 level, 32.92, that's a big zone. Probably if we get a shot at that on Monday, that'll probably be a pretty good opening week bid. So I'm still bullish here, but I am watching closely. If a trade deal is announced, gold comes off in a big way. No question about it. All right, let's take a quick look at U.S. oil. U.S. oil is in an interesting position. I sort of was doing a little bit of work on this, been trading oil all week. Not really that great. I haven't seen anything that blows me away. We might get a good late day trade today, but as far as what to look at, I'm still really bearish, guys. There's no question about it. Still very bearish. Nice rebound, though. Look at that. Look at that low coming right off of, 55? What's that low? 55 right in there. Boom. Went down, tested that, bang, rotated back up. Crude oil is up 4.5% this week. I know it looks big. I would call that just a retracement, just a cost of doing business. A couple ways you can look at it. Spike high there, spike low there. Remember, it is May. It shouldn't shock anybody that bids are hitting the market. That 62% level is an absolute thing of beauty. 61.25. I'm going to hit it a little bit later today again. I think that's a fantastic zone to be really looking at. So 62%, really just a cherry trade. Do you take it again today? Yeah, for a scalp, probably if you get a chance in the next hour. If not, and you want to wait till next week, that's fine. I don't know that I would be hitting it on next week's open. I'd probably be looking to sell. It's 78% up there, somewhere around 62.87. I'm not interested in buying just yet. So that's sort of where we're at with crude oil. That's for sure. Let me see. Really, T Marine, I'm 8 miles up the road from the White House. All right, so you're in the area, you're in the Beltway or close to the Beltway. Oh my goodness, a 200 spread at CEG. Sure, let's look at CEG. Constellation Energy. I think that's what you're talking about, right? CEG, 1 week. First thing I would be looking to do is back off to a monthly. Very nice compression right down in here. Boy, wouldn't you want to own it down in there? Bang, bang, bang. Rotation higher. Clearly the uptrend's there. What I would really be looking at is the ranges. Look how much bigger the monthly ranges have got. So there's action here. A couple of things that you could look at here if you're already long. Right from that spike high to a spike low, 62%, perfect strike, and then you came off. I'd be watching for a breakout above 280. If you get that, then you could be looking at 312 relatively quickly. Do I want to be long or short right now? Not from this level. I'd be looking at doing something like this on the daily. I love the gaps too. The gaps are fun. So you could really, you probably, if you were interested, you'd go right here, probably going long at 255, something like that, somewhere down in that zone. Or you could wait for maybe a deeper pullback. But you've had sort of a negative 3 days. I would be looking for a deeper pullback, maybe even down into this golden zone somewhere. This 2-day order block's a pretty good one as well. Just depends on how aggressive you want to be. That's for sure. But definitely an uptrend. There's no question about it. I wouldn't necessarily consider, that's not true. That is a gap. That gap right there has me concerned. I have a feeling that could get filled up, and you probably want to be a bidder down in there. It doesn't mean that once we hit the gap, we sell it. You'd be selling right now in anticipation of the price going to the gap. But somewhere down in here, maybe bidding 250s. There's nothing wrong with that. That'd be a great trade. Bid that gap. Last time we traded it was in February. My gaps in stocks, I typically love 60 to 90 days. March, April, you're over 60 days. It's a pretty good gap. Remember in markets, gaps get filled, gaps get filled, gaps get filled. If this one gets filled right here, you could even wait, maybe get a buy down here at 240, but something like this. And if you're already long, it's sort of a silly question. If you're already long from down in here, you're already doing very well. So if you're long, you probably hold it. I don't think that's the top of anything. Looks to me like you're on a pretty stiff uptrend. No question about it. All right, everybody, I'm going to go ahead and sign off for now. I think that gives you a pretty good look at CEG. Thanks for the question, T. We had a good week in here. We had a pretty good week this week. It was a challenging week to trade. There's no two ways about it. I found a lot of my numbers were not coming into play, and I've been sitting on my hands for way too long. It feels like I like to be active each and every session. So Definitely be disciplined. And remember, next week is a big week. You've got CPI Tuesday morning. I'm going to trade the CPI fallout with you Tuesday about this time. I'm going to let the markets digest that figure just a little bit. And then also we're going to have a couple workshops and things next week as well. If you have any questions at all for me, just head on over to the How to Trade Trading Room, sign up, click my picture at the top of the screen, and then ask me whatever you'd like. And other than that, we're ready to roll. All right, guys, you have a fantastic weekend. Bobby Bob, good to see you, Bobby. All right, everybody, have a fantastic weekend. We'll catch you back here on Tuesday. Remember, CPI is the big event. Keep your eyes peeled on our analytics thread. Probably have a couple trade ideas out ahead of that big release. Fantastic. Have a fantastic weekend, everybody. Get a break, trade well, and we'll talk soon. See you.